get my attention. I'd run away if I know your intention was trouble, deep, deep trouble. You got that sexy shape with that small little waist, everything and more to put any man in trouble. You are trouble.
Your investments. You just need to know where to cast your net. Last year, Sigma Global continued to rank among the top performing funds. With 18 different funds, you have more options to catch the best investment opportunities. Call 888 Sagicor to speak with a wealth advisor. Sigma Global Funds, only from Sagicor Investments.
Ladies and gentlemen, welcome and thank you for joining us for the second staging of the Sagicor Investments Money Talk series. Today, we will look at the global market perspectives. I invite you to stay tuned for an insightful evening. Now, I just want to acknowledge all of you who are joining us via Zoom, or maybe you are watching across Sagicor's various social media platforms. We invite your audience participation, so go ahead. Don't forget to like, comment, and share our content this evening by using the hashtags, hashtag Money Talks, hashtag Sagicor Investments, hashtag Investor Briefing. I'm also going to warn you, pay attention, listen keenly, and get your fingers ready because we do have some giveaways later on in the program. Last but not least, Sagicor Investments understands that we're all at different levels and stages and phases of our investment journey. So don't be afraid to ask your question. We're going to try to answer as many as possible. And we will also try to ensure that the answers are applicable, relatable, and digestible. I am your host, Dr. Terry Carell-Reid, and I am pleased to serve you in this capacity. So, now that we've gotten that all out of the way, get your notepads, get your pen, because we're about to get started. I would like to invite Bianca Nam, Assistant Vice President, Wealth and Corporate Relationship Management, Sagicor Investments, to kindly do the welcome.
Good evening, ladies and gentlemen. I'm pleased to welcome you this evening to the second staging of Sagicor Investments Money Talk series, in which we explore various topics to enhance your experience and market knowledge as investors. As your partners along this journey to create, grow, and preserve your wealth, Sagicor Investments remains steadfast in our commitment to empower investors to be able to capably navigate the local and global markets. We consider this our chief responsibility and have crafted this webinar series to be able to educate clients and investors with the necessary information that fosters wise financial thinking for life. It is a known fact that our world has become more globalized over the years, vastly increasing the potential of individuals and companies to maximize its benefits. We live in a world that is limitless in almost everything we do. And as investors or potential investors, it is important to arm ourselves with the right knowledge and tools needed to navigate the varying landscapes and keep abreast of the market's happenings and opportunities. Today, we have gathered a panel of experts to discuss the global market's perspectives with you and to share key insights on what can be expected when you extend yourself and your investment portfolio beyond our country's borders. In this investor briefing, our panelists will take us through the possible international opportunities that investors can consider, as well as provide vital guidelines for building strong investment portfolios that have a healthy mix of local and global assets. In this ever-evolving world lies great potential for investors to tap into and reap returns, and it is important to think long-term and consider various possibilities for growth. Now is the time to think beyond the horizon, to begin or continue a positive trajectory of building generational wealth. Let's use this opportunity to act local and think global as we work together to move our investment portfolios to the next level. Ladies and gentlemen, welcome to the forum. Please enjoy the proceedings.
is not a gas can. This is a highly liquid, rapidly depleting combustible capital input, adding incremental value to the transportation sector. Think like a stockbroker. Learn how at investorcorejamaica.com.
Thank you so very much, Bianca Nam. Certainly some fantastic takeaways. Act local, think global. We should be looking at building generational wealth. We should be trying to think long-term and looking at the various possibilities of growth. Again, thank you for that amazing welcome. So we are going to jump right into our panel discussion. Joining us virtually for today's discussion, we have Mr. Vitaly Meshkalam, Managing Director, Global Market Strategist, Goldman Sachs. In studio, we have Mr. Stefan Wright, Lead Investment Officer at the IDB Invest, Mr. Sean Newman, who is the Executive Vice President and Chief Investment Officer at Sagicor Investments Jamaica, and Ms. Tara Nunes, Chief Executive Officer, Sagicor Investments Jamaica. Welcome, esteemed lady and gentlemen. Mr. Meshkalam, let's begin with your presentation. Bienvenido.
Thank you so much, and thanks very much for the invitation. It's a shame that unfortunately I can't be there in person. But look, I think it's, as you said, act local, think global. I mean, this is certainly the way we've been attacking markets or looking at markets. Now, it is a little bit tricky to talk about markets ahead of an important day, which is tomorrow. And tomorrow is a meeting of the FOMC committee in the US, so where they will decide what to do with interest rates. Now, assuming we don't get any surprises from that meeting, the overall thesis for investing in international markets or emerging markets, I think still remains quite valid and will continue to gather pace. Basically, we have a Federal Reserve in the US that has found cover because employment numbers continue to lag. This means that they will not be rushing to hike rates or announce tapering of its quantitative programs. In turn, this has brought volatility lower in most asset classes, which tends to coincide with a search for yield, carry trades, which you might have heard, where people are simply looking for ways to position in relatively quiet markets and thinking about how to generate positive returns. Now, as you can see from this chart, when you're looking at markets, and when I'm talking about international markets, I'll refer to them as EM. Basically, what we're playing for here is a staggered recovery from the COVID crisis. So initially, you had the US coming out of the crisis. That has since moved on to Europe, but there's an expectation, at least our expectation, that going forward, the benefits of the recovery will begin to trickle down to the rest of the world, to international markets, emerging markets. Now, if we take a look at valuations, other economic indicators that make this point, if we look at something like PMIs, which are basically thought of as the general health of the business sector in many of these countries, you can see that a lot of countries have certainly begun to see a material improvement in PMIs. Anything above 50 basically means that these countries and these economies are in expansionary mode. It began with the US. Europe has now caught up and in fact is increasing very rapidly. But as you can see, the gray line there, it's emerging markets are the ones that continue to lag. Now they lag because if we take a look at lockdowns, basically we've created a lockdown index to get a sense of how COVID has impacted these economies. Many of these economies didn't really see an easing of lockdown conditions until earlier this year. Most of them are moving in the right direction. Asia is the exception because there's been renewed outbreaks in places like Singapore and Taiwan. But I must stress that these outbreaks are coming from a very low base. So for the time being, they don't hold a tremendous amount of concern from our perspective. And so finally, if we take a look at performance in emerging markets, so these markets year to date have actually lagged. And this is important because, as I mentioned, what we're playing for going forward is really a combination of places that are cheap, so where valuations are attractive, or places that have lagged the general recovery in the global market dynamic that we've seen over the last several months. In emerging markets, this is a number of different markets where you can see it's by no means a monolith. We have different countries doing different things, some quite well, others quite poorly. But the point that I'd like to leave you with is that there's opportunities here. The places that you see in red are unlikely to remain in red for quite some time, because we believe that as the recovery continues to gain hold globally, as vaccinations are rolled out, equities in emerging markets, certainly currencies in emerging markets, are likely to continue to benefit. And actually, you're likely to see an acceleration of performance in these markets. And then if we turn to the sensitivity of how these markets have been trading, one of the reasons I started off talking about US interest rates is because of this chart, where if you just look at the red, dark red bars, effectively, what this is telling us is these markets, unfortunately, are very much beholden to what happens in the US interest rate market. So this is why all markets have really been trading on the back of what Federal Reserve officials say or don't say in the United States. But finally, I would say that in a world where, if we look at commodity prices, in a world where commodity prices are rising, in a world where vaccinations are being rolled out, in a world where economic recovery is certainly taking place, it's quite clear that emerging markets do hold opportunities going forward, and will only really be interrupted once we reach a scenario where the US is ready to embark on significant rate hikes, which we don't believe will happen probably until 2023, but may begin to be announced in some fashion early next year. And with that, I'll stop. Thank you.
Mr. Meshkalam. Thank you very much for that. So let's get into the discussion, and I'll actually start with you. I actually appreciated the fact that you said that although the emerging markets are lagging, the fact that there is recovery, there looks to be opportunities, and so all is not lost. My very first question to you is, the global markets have done well year to date. What is your view on the second quarter? Will it end on a positive note, you think?
I think so. I think unless, we get a surprise tomorrow, and what do I mean by a surprise is if the Federal Reserve announces a tapering of its QE programs as early as tomorrow, you're likely to see interest rates in the US, especially real rates, move significantly higher. Mm-hmm. And that's something that's tended to be correlated with risk off in markets, especially markets that are as volatile as emerging markets have tended to be amidst these types of dynamics. So I would say that is the outlier, that's the risk. That is not by any means our base case. In fact, we don't see this tapering to be announced until later this year, probably not until September, or maybe even beyond. And so from our perspective, yes, I think we are likely to continue to see risky markets close the second quarter on a relatively positive tone.
All right, fantastic. I do have a follow-up question. You touched on it earlier. You touched on equities. You spoke about currencies. How do you feel about exposures across commodities, equities, currencies, and rates?
Look, I think that's a great question. And it gets back to what I think the most significant driver of global market performance is, which again, I think is related to US interest rates. So in that environment, if I had to rate the different markets that you mentioned, I think commodities are probably the easiest for me to be quite bullish on, because they are likely to benefit from a continuation of the reopening trade as economies come back online following the COVID crisis. You also have a lot of specific supply dynamics that are actually helping commodity prices remain fairly well sustained. So commodities, I think, is probably the clearest trade of the ones that you mentioned, followed closely by equities, because equities are in many ways responding to many of those same variables. Beyond that, I think we're finally at a place where currencies may do well, because we are probably entering an environment where the dollar could weaken for several months. Again, I don't know if this is the large weakening move that many market participants have expected, but certainly I think it poses a near-term opportunity on the currency side. And then finally, we get to rates where I think it's much trickier. I mean, if we're talking about the US, if anything, I would rather be paying rates I'd rather be short rates at these levels because they've actually come in and tightened quite a bit. And that leaves that market somewhat vulnerable to backups in interest rates. And then certainly emerging markets or international markets that are very sensitive to US interest rate moves, I think would be the last of the pecking order, if you wish, and probably the least attractive of the markets that we talked about.
Thank you so very much. I'm definitely here taking notes, and I would like to just remind all of our viewers, everyone who's watching, please go ahead, share the questions via Zoom and social media. So I'm going to move from Vitali. I'm going to look at my panelists, and I'm going to ask Tara a question because we've been seeing a lot of persons speaking about investments. We've definitely seen more interest. In your opinion, how would you describe investor sentiment at this time?
Yeah, can you hear me? Okay, sure. So I'd say investor sentiment right now is cautiously optimistic. You know, we spoke about in the height of the pandemic, we saw there was a flight to safety, really. You know, investors were shifting their portfolio into fixed income instruments, government bonds, short-term repos, treasuries. Those are the safe instruments, right? Now that we see some reopening happening, you know, economic activity is picking up, we find that investors are positioning themselves to take advantage of the opportunities that are coming. And, you know, we've seen some positive data. If you look at the S&P, that's up some 40-odd% year over year. In the local market, we see our stock exchange, you know, slightly moving up, some 7% year to date. We're getting positive economic data. The IMF has revised their projections for world global growth at 6% this year. The US is some 6.4% projected, and in Jamaica we're looking at about 5%. So these are positive signs. Mm-hmm. So in the equities market locally, we see that institutional investors are somewhat on the sidelines, mm-hmm. a little cautious right now, but as things continue to be on a positive trend, we expect activity to pick up and investors become more bullish.
Right, and we can understand the concern. We can definitely understand why you'd be cautious, but I believe even from the graphs, we're realizing that some markets are picking up, and of course, the confidence will increase. Stefan, how do you see the region's leading economies performing coming out of the global pandemic?
Thanks, Terry. Well, it really depends on the categorization of those economies. Some of economies are tourism-based. You know, for example, Bahamas, Barbados, Jamaica. So we will have a little bit longer time to recover. Tourism, as you can imagine, got a significant hit last year. Mm-hmm. We're on our way back. Just last week, the U.S. occupancy was up to 61% for last week, which is quite significant. You know, in Jamaica, last April, we were probably down to 20%. So we do have a long way to go. You know, when I talk to the people in the industry, many of them are saying that their bookings for this winter season, so for Thanksgiving and Christmas, mm-hmm. are up 40% over 2019. Now, 2019 was the best year. Wow. So if you're looking at X number of rooms booked, 100,000 rooms, and this year you're at 140,000, it means that there's a lot of pent-up demand. People are dying to get out of their houses. And so we really do expect a good season. Now, that's not to say that the entire economy is going to recover. Correct. You know, we were down 10.2% in 2020 in terms of GDP. And for tourism to really get back to where it was in 2019, most experts are saying between 2023 and 2025. So it is going to take some time, but I think you know, some of the larger resorts on the North Coast, mm-hmm. I expect them to have a very good winter season. And then, some of the smaller resorts, some of the business hotels, those are going to take longer to come back. So I think for tourism economies, it's going to be a longer haul, maybe all the way up to 2023, 2024 before they're fully recovered, although there are going to be pockets of success this year and coming into next year.
And we are still optimistic. We are
We're
still
very
optimistic.
optimistic, yes.
I do realize that I'm meeting and I'm seeing a lot more visitors to the island. They're here and they're extremely happy, as you rightfully said, just to get out. And the fact that we are an island speaking about vaccinations, that's a part of recovery. It's a part of how people view us with confidence. So thank you so very much for that. My question for Sean Newman, what are the opportunities in Jamaica and the region based on the trends in the market?
Thanks for being here. This has been a great conversation so far. I'm so excited to be talking about markets with this esteemed panel and my old friend Vitaly. So great discussions, and I'm really excited. Just in terms of positioning, cheap promo, our Sigma Equity Fund is actually long energy. So that was absolutely no collaboration across our fund management team led by Donnet and company, and the remarks you heard here today. So I think that our strategy and philosophy align pretty well here. So I'm happy to hear that. In terms of what opportunities we're seeing in markets, I think just to piggyback on Tara's comments, I think we'll also remain somewhat cautiously optimistic. We think markets will continue to lead economic recovery, and it's encouraging to hear some of the stats that Stefan just talked about, because I think, of course, markets will price in before the fundamentals fully recover. And while we're expecting somewhat of a V-shaped type recovery, it may not be as rapid or as strong or as robust as what we're seeing in developed markets. I think that this bodes well for opportunities both in the public space and in the private space. In the private space, we're seeing some opportunities within private equity world, where we're seeing opportunities to fund some really interesting opportunities in infrastructure and energy. So we'll continue to explore those. And in the public side, I think it's a great time to continue to invest in our local market as well as look at opportunities abroad. As Tara had mentioned, our local markets are lagging S&P by about 5%. So we think that there's some upside opportunities there. And again, if you're playing the recovery trade, I think this is a great way to do that, looking at our listed equity funds as well as some other opportunities that we have on a name-by-name basis, which we'll get into later. So we remain cautiously optimistic here.
Yeah, no, absolutely. And I just want to say on behalf of all the viewers, we appreciate these types of conversations. Years ago, I never would have dreamt that I could become a shareholder. I didn't know what it was. I thought it was reserved for certain types of persons or certain citizens. And it's so pleasing to see that we have conversations like this where we can have other persons learn more about what their opportunities are in creating generational wealth. So I just want to thank Sagicor Investments for creating this space. So Vitaly, Sean said earlier that you're an old friend, just that he's talking about the relationship, not that you yourself are old. We have been looking at markets through the 3 R's: reopening, reflation, and revaluation. How would you describe developed markets and emerging markets against this backdrop?
That's a great question. So look, it's really just a question of sequencing. And I think I alluded to this a little bit in my opening remarks, but it's been a staggered recovery, which is, I guess intuitively it makes some sense just because of where the resources globally and the global economies tend to be directed. So you tend to see developed markets come out of these crises faster. But this time around, it was also because of one key factor, which is there was a lot more fiscal space in developed markets than there were in emerging markets. And so you had a situation where the crisis hit in 2020 and these governments spent like there was no tomorrow. You're seeing it in places like the US. Even Europe has shed its non-spending kind of traditional clothing and is beginning to spend more significantly. And so that fiscal expenditure really allowed developed markets to jump through the hoops much sooner than emerging markets. But the beauty of a globalized economy is that sooner or later, the benefits will trickle down. It's very difficult for the rest of the world not to grow if Europe is growing, if the US is growing, if China is growing. Ultimately, it's just a question of time. So I think those 3 R's are spot on, and they will work. It's just going to be a question of waiting for the lags to play out. And again, something that Sean mentioned, for example, with the local market in Jamaica. I mentioned this because, right now, the technical term of what we're looking for is deep cyclical value plays, which is literally just a fancy way of saying, has something lagged and is it cheap? And so the markets that score well on those two variables will do well going forward, I suspect.
Thank you, Vitali. Okay, so Sean, I'm just going to go based on what he just said a while ago. We've been speaking about the effects of the pandemic. We've been speaking about recoveries and the different activities that are picking up. Coming out of the pandemic, we see the activities picking up in the capital market specifically. Do you see this trend continuing for the year? And what do you think are specific opportunities that are there?
Deep cyclical value. I hope everyone caught that and can say it without twisting the tongue.
I wrote it down.
So in terms of capital markets, it grown to a halt, similar to how air travel did for most of the region, this time last year. But fortunately, year to date, we're up, about 5.5 times relative to where we were same position last year. And it's a mixture of industries which are coming to the market, and these are some mostly local, but a few regional players in there as well. And mostly on the debt side, so there are a few equity transactions in there as well. But activity is definitely picking up, and as I mentioned, relative to where we were this time last year, about 5 times more than where we were seeing it. So clearly not a big delta in terms of our absolute number, but the pipeline is growing, or the activity is growing, and we're getting a lot more calls to start exploring and having initial discussions and putting together proposals. So looking up.
Oh, fantastic. Tara, let me come to you. Economies do extremely well when we see investment from the private sector as well as the public sector. Earlier this year, Dr. Nigel Clark spoke to investment houses about using lollipop tactics to sell investments. And, we've seen the ads and everyone decides that they want to just buy on impulse. And he called for greater education of the investing public. What is Sagicor Investments doing in this regard?
Terry, I'm so glad you asked me that question, because at Sagicor Investments, that is something we place great emphasis on. Really ensuring that our clients receive sound advice and guidance. Our mantra is to create, grow, and preserve wealth for all clients, right? So recently, we just launched an online educational platform called Sagicor. And this is the first of its kind in Jamaica and the region, so we're very proud of it. And thank you. And I don't know if you've heard the tagline that's been in our ads going out, but it says, think like a stockbroker. And that is really just saying that anybody can think like a stockbroker if they have the right knowledge and information and tools. So this site has a wealth of information regarding investments. There's a glossary of all the pertinent investment terms. We have articles and blogs under Core Curate, which really keeps persons informed of what's happening currently in the markets, locally and regionally. And we even have a feature where you can load your investments onto the platform and then be able to track its performance, in real time as markets change, right? So it's pretty good. So I really encourage everybody, if you haven't yet, log on to investorcorejamaica.com, and at your fingertips is a wealth of information.
Fantastic. Thank you so very much. One thing I can say is, even during the pandemic, it's been a crisis for so many countries, so many different markets, but certainly the innovation and the creativity and really providing research and information for everyone, I think that is absolutely fantastic. And I think what you're also trying to do is encourage persons to research. It's our responsibility at the end of the day to ensure that our money works for us. So thank you for that platform. Again, it is investorcorejamaica.com. Okay, so Stefan, I'm heading over to you. We've been working remotely. Everyone is at home. Everyone is homeschooling. We want to tear out our hair. We need to get out, go to the beaches. Where is IDB with respect to returning to office, to work in office? We're seeing that the markets are doing better, activities are happening. Does that mean that, we're going back to the office very soon?
It's interesting you asked me this question because
I'm going to ask Vitaly as well, but I'm making you answer first.
because I haven't been to my office in 15 months. So all IDB has been completely closed. We started back maybe 2 or 3 months ago with a few people going in, really just core staff, so the front desk person and the technology person. And we are really waiting on, well, originally we were waiting on COVID to stabilize in Jamaica before we sort of roll out people going back in on a phased basis. Now I think we're also looking at rates of vaccination as they are looking at in the US. But our DC office is closed. They're getting closer to opening up, so maybe by the end of summer, I would imagine that in the DC area, you'd probably have 60% or so of people vaccinated sometime in summer. That's a much better environment to be opening your office in rather than last year where we are having hundreds of thousands of deaths. And so I think once DC opens up, then the rest of the region will. I think we also look at it on an individual market basis. And so we are planning to go back sometime. We don't have an official date, but you know, COVID has been under control for the last several weeks. So I would expect by summer we should hear something. But we've been very conservative. In fact, there was a conference call I was on many months ago, maybe 6 months ago, where, you know, IDB is a place where we encourage alternate work schedules. So people work from home normally. People, you know, have what we call compressed work week. And you sort of used to have a reason to do one of these things. I have a young child or some other issue that I need to take care of.
Right.
And it was, you know, always approved. Now we're talking about you need a reason to go to the office, right? So you're fine at home, you're doing your work. So why you need to go to the office? So I think we're coming back, but it's going to take a while. And the truth is, you know, by all numbers, last year we were even more productive at home. Wow. So that should tell you something.
Right. No, thanks for that. I see Vitaly laughing and shaking his head. You know, where is Goldman Sachs on this as well in terms of returning to the office? Is it similar to IDB?
Fortunately not. So I'm actually quite envious of Stefan because the approach at Goldman has been a little bit different. I mean, it's been quite conservative medically speaking, clinically speaking. But basically, for the last 6 months, there was an opt-in strategy where if you wanted to go to the office, you were able to do so, provided you got tested 2 times a week or 3 times a week, depending on how often you were in the office, and obviously face masks and everything. As of yesterday, so my 15-month tenure in my home has ended. So yesterday was my first day back in the office. And it was basically a call for the entire New York population to come back to the office. So now going forward, it's really an opt-out strategy where if there are healthcare issues, childcare issues, then you might be able to opt out. But otherwise, there's an expectation that we will now be going in to the office in a more sustained fashion, basically going forward, unless something changes. That's for New York. Obviously, different centers around the world for Goldman are adopting local regulations and local strategies. So it's not even across the board, but for New York, we're back.
Fantastic. Let me ask you about risks. You know, whenever we speak about investments, whether it's local investments or even global or international investments, there's always this talk of risks, and everyone has a right to be cautious about where they're investing. But what are some of the risks that you are paying close attention to? Is inflation really transitory?
That is the million-dollar question. You've hit it right, the nail on the head. I mean, we've been having this discussion internally and with clients for about a month now. And this is why that Federal Reserve meeting tomorrow is so important, because we're all trying to understand. The Fed keeps on saying, don't worry, it's transitory. But those of us that come from emerging markets know that sometimes inflation is not always as transitory as we'd like it. And so I would say the one reason to believe the Fed right now for the time being is that most of the items that are showing the greatest inflationary impulse are items that are very closely related with reopening, which are in turn very closely related to fiscal expenditures. And so unlike a cycle, like a lending cycle where banks continue to lend money, receive more deposits and lend again and again, fiscal expenditure tends to be a one-off event, unless governments keep on passing fiscal plans, which is becoming obviously more and more difficult. So one-off events tend to then have a lower probability of generating sustained inflation. But to be quite honest, the jury is out. So definitely, without a doubt, inflation is something we're watching very closely as a risk. Another risk, I would say, is the new variants of COVID that are around, which is on the other side of the distribution. So one obviously would lead to much higher rates. The other would lead to much lower interest rates. But I would say those are the two spots that I guess keep me up at night more than anything else at this point.
Definitely. So you said inflation and the new variants of COVID. We don't want you to stay up at night. We want you to have a good night's rest, Vitali. But we did speak about banks, Sean. So my question to you is, are we past peak moratoriums? For many of us in Jamaica, let me just say this, especially as, a beginner, as a consumer. The first time I heard the term, I was just like, what? And then after I did my research, I realized how necessary it was and why it was put into place. Now that things are coming back, now that things look like it's happening, businesses, people returning to the office, are we past that?
Well, I think, first, I'm just go back one. I had an opportunity to talk to Agostino yesterday, and it was so great to see the trading floor at Goldman populated with people. So that was very refreshing to see. And I wish, I would compare moratoriums to maybe the traffic that we used to see. I think we got, blessed to be, in driving around town, and traffic were very low, but now it's very high. Right, so I think in terms of where we are with regards to moratoriums, I think we're probably past the peak. I think banks and other lending institutions are going to be more forward-looking in their expectations of cash flows and companies' recovery paths. And as such, I think there's probably going to be a little tighter, tighter conditions when it comes and control over whether the willingness of these institutions to continue to extend further as we continue to see the recovery take shape.
Thank you. Tara, as we're speaking about investments, and certainly as we're learning about investments, we hear terms like, equities and bonds, and in some spaces, well, in a lot of spaces, cryptocurrency. How do investors, avid investors, access some of the opportunities through Sagicor investments?
Well, there are actually several ways that investors can participate in these type of instruments. Firstly, they could choose to buy them directly. Mm-hmm. You could own a bond, you can own equities individually. And to do that, you simply, establish a relationship with a securities dealer or a broker, such as Sagicor Investments or others. Another way to access is through what we call pooled investment funds, so mutual funds or unit trusts. And these are a great way for, investors to participate in instruments that they probably would not have been able to otherwise. Because, for instance, a lot of these may have certain minimums to buy, and that would prohibit a lot of investors. Global bonds, for instance, some of them have a minimum of between 100 to 200,000 US. So you realize only certain investors could buy directly. Mm-hmm. However, the option exists for clients to go through a unit trust. There's a fund that would hold these bonds, and for as little as probably 100 US, you can get access to all of these. So that's a great way for investors to explore. Another way is through what we call exchange-traded funds, or ETFs, and that allows you to buy, again, a pool of companies, a basket of securities through one exchange-traded fund, right? So similar to a mutual fund, it's a collection of the securities, but these trade on an exchange, just as a stock does. So let's say you want to buy, the big tech stocks in the States. You want to buy Apple, you want to buy Microsoft. You could try to buy them individually, right? It could get expensive if you're trying to buy, several of these companies. Or you can just, buy one ETF, such as XLK, which gives you exposure to all of these companies, and you buy once, and you now own, basically a piece of all these different companies. So that's a great way to also get into the markets. Cryptocurrency.
Yeah. I can't go anywhere without hearing people speaking about cryptocurrency and the different kinds. And I'm like, I don't know enough about that, you know?
So cryptocurrency, that's a hot topic right now, but I'll say, that's a lot of risk there as well. So persons that are interested in that, really you need to get the facts and really understand what the risks are. It would involve, opening what they call an online wallet through, online brokers or exchanges such as Coinbase, right? Where you'd have to transfer funds into that wallet and then you'd be able to trade in the currencies. But, the bottom line is get advice from an investment advisor before going into any investment instrument because, they will guide you as to what's going to help you achieve your goals as well as what's really going to suit your risk tolerance, So speak with an advisor, get the information and be informed.
Absolutely. I'm going to throw to Vitaly. What is Goldman Sachs' view, look at him smiling, about cryptocurrency? It's something that everyone is talking about, the different kinds, which one is better? We see so many cryptocurrency experts, showing up overnight. What's your view?
So look, you're asking somebody that's called a non-coiner. So apparently that's what people that don't have any of these cryptocurrencies are called. But I would say Goldman is taking a very measured approach, and we're certainly looking to get involved. We've done the legwork around the infrastructure. We've begun trading some instruments on the futures exchanges related to cryptocurrencies. But I think as Tara just mentioned, these are not instruments for everyone. I mean, I know that they are all over the Twitter sphere right now, but it's incredibly complicated to understand which are the winners, which are the losers. The technologies, in many instances, are quite different between one coin and another. There are some coins that you could argue have high transactional value, for example, like in Ethereum, whereas Bitcoin, which is the most popular one, actually has very low transactional value. There's a whole host of discussions taking place around whether these cryptocurrencies are real stores of value. And I think we also have to understand that there is a digital generation that is looking at these instruments as a non-regulated store of value. So I don't want to dismiss it by any means, but I just think we need to be a little bit careful. We need to tread slowly and educate ourselves before we delve deep into an asset or a security that is so volatile like cryptocurrencies.
Absolutely echo that sentiment. Would you wanted to say something?
No, I completely agree with Vitaly's comments. I think, I will harken back to the days of, who remembers Netscape, right? Do you remember Netscape or MySpace? I see Vitaly smiling, right? So yes, for the younger crowd out there, these were early internet, internet pioneers. So you don't really want to throw all your eggs in one basket just yet, as the space is still evolving, and you're not sure whether or not this is going to be the eventual winner of the space. So I completely agree with those comments.
Absolutely. Stefan, I'm coming over to you. I always knew the role of IDB Invest, but certainly during the pandemic, hosting a lot of events, moderating a lot of panel discussions, the presence of IDB Invest just seemed to be everywhere in terms of the support, the economic support that you gave to different sectors and industries. The question is IDB prioritizing any specific industries or sectors, or is it country-specific?
Right. So we cover a wide variety of industries and sectors. And we don't really prioritize. In the last 2 years, we've done most of our transactions and approvals in the Caribbean in financial services, but that's not necessarily really by design. The priority for us is what we call S&I, which are small and island countries. So the Caribbean countries that are part of the IDB group, and also Belize, Domrep, and Haiti. And so, so those three, and then we also, let me just name them, Jamaica, Barbados, Trinidad, Guyana, Suriname, and Bahamas. And then the other three I mentioned, Belize, Haiti, and Domrep. So those are our priority in IDB. We have very big targets for approvals and disbursements in these countries. And again, our goal really is to help the region, right? Many of the bigger markets, Brazil and Mexico, have lots of financial institutions who can carry them, lots of access to capital. But the smaller markets don't necessarily do. And so we're very focused on, building out teams in these markets. We have IDB. There was a time when I was the only person in the Caribbean for IDB Invest. Wow. Now we have 7 people in Jamaica and maybe about 25 in the region. So it's very important to us to build out the infrastructure and resources and people to be able to support the region.
Absolutely. As we speak about building out, infrastructure, we're speaking about investments, we're hearing all of these different kinds of questions, even those coming in from social media, persons interested interested in cryptocurrency and other types of investments that just might come about. From Sagicor Investment standpoint, is there any plans of expansion? I was like, oh.
We would have said previously that we plan to expand into the Cayman markets. And so I'm very happy to say right now that we have received our license from the Cayman monetary authorities. Nice. We have that in hand, and so now we're moving full steam ahead to set up our operations, which we expect to do before the end of the year. So we're very excited about that because that's going to allow us to expand our clientele and also our product offerings in the region.
Fantastic.
Right? And then, of course, we're exploring other opportunities as well, and we'll execute on those when the time is right.
All right. Sounds like something big is coming. Vitali, I come back to you. What probability do you place on the U.S. president's proposed infrastructure bill? Low, medium, or high likelihood of approval? And is it fully priced?
I think it's a high delta. I think it's going to happen. It's really just a question of what's the extent to which it'll happen, right? So right now the government is embroiled in trying to do this via bipartisan negotiations, but the current government does have the tools to go at it alone if need be. And so I would say it's, if I had to put a subjective probability, we're talking 60, 70%, maybe even slightly higher, that it will get done this year. It's really just a question of what the magnitude will be. In terms of whether it's priced, I think so. And this is why you've probably been hearing a lot more about people wanting to sell dollar assets and move into non-dollar assets, is because there's a discussion that maybe we're beyond peak growth and peak policy in the US, and that even if we get this announcement in the next few months, this has been talked about now for 4 or 5 months, so it's difficult to argue that it's not in the price at this point.
Okay, fantastic. Quick question. As we speak about cryptocurrency and we realize that during the pandemic, a lot of us have had to go online. Therefore, a lot of things have been digital. A lot of persons who were not even savvy where it came to digital instruments are now having to find themselves within this ecosystem. But with digital comes, we know, cyber attacks, which means that we have to be even more secure. Cyber security. As we're talking about investments, and we know that persons become more vulnerable, especially, I guess, emerging markets, what are our views in regards to ransomware when it comes to investments? And anyone can take that question.
I guess the ironic thing about that is that with more transaction and more content being created and more work being done electronically, one of the beneficiaries of this have been, crypto, right? As within the past week, JBS, Colonial Pipeline networks have been attacked, and those ransomware was paid in crypto, in some type of cryptocurrency, right? So it's somewhat ironic that the very thing that has pushed us into this atmosphere is actually benefiting from it in a unintended way, unintended way. So. In terms of ransomware, I think this is certainly going to be a sector that is going to probably remain sought after. As you look at all of the companies that engage in various security protection services, those needs are going to continue to expand and really explode. If you are looking at some of the future job series that was out, and data protection analysts, these are new work categories which are going to be in high demand. It's not just about protecting the data, but being able to to really put all the security requirements around it. So, and ransomware and those related sectors can only stand to benefit from that, from those services.
Mm-hmm. Okay. ESG, this is for Vitaly and Stefan, and either one can take it or you can add a comment. Environmental, social, and governance factors are now mainstream. What is the IDB's and Goldman Sachs' view on ESG, and how will it affect the markets? Who would like to take it first?
Well, I can go. I mean, environmental and social risk is a risk that we have always identified, and we strategize to make sure it's mitigated in all of our transactions. And so, many people in the last 10 years have sort of come to our view that you do need to consider these risks when you're analyzing any transaction, because the cost can be quite expensive. So it's very important to us. Every transaction we do, every project we do, we analyze the environmental risk. We ensure that the company is doing something about that risk or has it under control. And we do think that the broader market has come on a lot in terms of understanding and analyzing and considering these risks as well. It's not just about credit risk. It's not just about making sure that the cash flows are sufficient to pay back your debt. Obviously, that's a major feature, but there are other risks as well. Corporate governance is also important. How diversified is your board? How important it is to have independent minds on your board? What is the structure of your organization? So all of these things sort of blend together to ensure that our project is successful. So we think they're all very important, and we consider them on all transactions.
Vitaly?
Adding to what Stefan said, I think you also have a situation where the market is growing tremendously. And now, obviously, sometimes it gets overshadowed by crypto, but in reality, ESG investments as an investment class or as an investment framework has gained tremendous ground over the last 12 months, to the point where new indices are being created of assets or securities that meet a certain threshold. There are a number of ranking frameworks where you can rank governments and companies on environmental, social, and governance factors. And I think it's something that's here to stay. I mean, going forward, it's going to be increasingly difficult not to talk about ESG whenever we're making an investment, recommending an investment, buying an investment. And it's certainly something that we've already seen, for example, especially in some jurisdictions, especially in Europe, where many European investors can no longer buy certain companies or certain government assets because they don't meet a very minimum of ESG criteria. So without a doubt, this is probably one of the most exciting things to happen to global markets in the last probably decade, I would say, other than the tech side.
I absolutely agree, and certainly we've seen more consumers, even us on the other side. We are more interested in companies that are showing a lot of interest in climate change and environment and making impact socially. And so I think it's absolutely important, not just the profit, correct? So we want to get everyone else involved. I know that questions have been coming in, and we're going to address them shortly. But have you signed up for InvestorCore? We heard Tara speaking about it. InvestorCore is Sagicor Investments' educational platform. So check this out. We will take your questions right after this.
This is not a high heel. This is a highly traded textile-based asset that offers accelerated growth despite real-time market gyrations. Think like a stockbroker. Learn how at investorcorejamaica.com.
All right, thank you for staying with us. If you are just joining, you are tuned into the second staging of the Money Talk series by Sagicor Investments. And today, we are discussing Money Talks, global market perspectives. And now, we are going to be taking your questions. I see all the questions in social media land, those via Zoom, and so now I am going to ask them. I have a question for Sean Newman. It comes in via Facebook. It says, with corporate, it comes from Anthony Dunn. With corporate debt at significant levels due to low interest rates for the last few years, how concerned are you with rising interest rates in the US and the impact this will have on corporate debt? Do you see any systematic risk by 2023? And thank you so very much, Anthony, for that question.
Thanks, Anthony. I'm glad it was not a no-coin question, first of all. Heart back to my high school days. But in terms of rising debt levels and interest rates, I think it's key to know, right? So if you look at expectations for 22 and 23, I think you're actually looking at pretty low default rates. I think in EM, the average is about 2.5% of the high yield universe. So really a lower number on aggregate. And then we look at the US high yield market, I think the default expectations are still pretty low, still around 2% on average if you look across various industries and sectors. So I think this means that despite very high debt levels, balance sheets certainly have the wherewithal to accommodate such high levels of debt given low interest rates. And again, if we're looking at the delta of where we think rates are going, we don't think it's going to cause a rapid, we're not going to have a taper tantrum again, and high yield spreads are going to end by blow out to 800 1,000 levels, which would really put a big crunch on credit.
Thank you for that. Certainly, Anthony, I hope that answered your question. If you have any follow-up questions, go right ahead and drop it in the chat. This question is for Vitaly or any of the panelists. It's from Karen Richards via Facebook. We were speaking about cryptocurrency earlier. She says, do you think that cryptocurrency will become the currency of choice in the next 5 years? So maybe there's regulations, maybe we've gone through the different ropes. She's saying in the next 5 years, do you think it would be or could be the currency of choice? Vitaly, I give it to you first.
Maybe the right question is which cryptocurrency is going to become the currency of choice, right? Because cryptocurrencies are going to have a tremendous amount of competition going forward, not least by developed market central banks. So soon you're going to be able to buy the electronic version of the Chinese renminbi or the US dollar or the euro. And all of these will compete with the Bitcoins, Ethereums, and Dogecoins of the world, right? So it will ultimately, I think, come down to regulation and how governments look at regulating some of these markets, precisely because of the ransomware issue. There's anti-money laundering considerations that will affect these markets. So I have no doubt that the future is very much in digital currency space. I just couldn't tell you which one will win out in the next 5 years.
And that's a fair answer. We'll take a question from Sean via Zoom or from Roy Adams. How will China-USA relations affect your analysis? So we're looking at the relations between China, USA, and we understand that that can affect markets. It can affect global analysis. How will it affect our analysis?
Well, I think it comes back to can fold in the ESG references that were made earlier, right? You have to look to Chinese fixed income markets earlier this year to see the concerns in the credit space there with regards to certain of the large not quasi-sovereign entities or companies which are becoming too systemic. I think our view coming into the year was that, let's call it the atmosphere, the climate between the US and China is going to remain a bit frigid. I don't think there's going to be too much thawing in that category. Good news is that we don't think it's going to get much colder. So we're not going to see the Biden administration, lobbying more sanctions or increase the rhetoric. But I certainly think that they've drawn a clear line in the sand. And you're saying, let's not touch it. Let's not go over there. So, that's the way in which I describe how I think relations are going to evolve.
Vitaly, anything to add?
No, I think that's right. I mean, I think this administration is much more concerned with other areas of the world, including and not limited to something like Russia, for example, Turkey, much more so than with China. But the reality is that the US and China are now on a collision path of sorts, but not in terms of conflict, but rather competition, right? And that just means that there will be friction from time to time in the foreseeable future.
Thank you so very much. When it comes to global market perspectives as well as investments, it's a lot to unpack in a very short space of time, but thank you so very much. And thank you, social media land, for your questions. And now I hope you were paying attention, and I hope your quick fingers are ready, because we have some giveaways for you. Question 1, are you ready? Name the Sagicor Investments online platform that facilitates the economic submission of application forms for initial public offers, IPO, additional public offers, APO, or rights issues. That was question number 1. Did you get it? I'm going to repeat it one more time. Are you ready? All right. I would like you to name the Sagicor Investments online platform that facilitates the electronic submission of application forms for IPOs, APOs, or rights issues. And the second question, we're taking the answers right across all the platforms. It's the person who is fastest and the most accurate. Question 2, give the name of the first ever online investment educational platform in the region geared towards increasing investment knowledge and education among local and regional investors that is powered by Sagicor Investments. Quick fingers, and as soon as you give us the answers, we have our social media managers who are across all platforms just to ensure that we do this correctly. Our winners will be announced toward the end of the program, so make sure that you stay tuned. So the question I have is, what has your investment journey been like? If you are not yet part of Sagicor's investment journey, you might want to give us a call after seeing Kevin's story. Take a look.
Hi, I'm Kevin Bell, own and operate Bell's Auto Services. I've been a Sagicor investor for the past 21 years. I've been a mechanic for the past 30 years. Started at Oberlin High School and went to the Jamaica German Automotive, and then went to motor sales and been there for about 18 years. I love my work. I put all the energy in my work. Whatever I'm doing, I try to do it at the best of my ability. My investment journey began about 1999-2000. I had my first son at 2000, so I actually started saving for him from that time. And I wanted him to go to the university and get things that I never got. I didn't know much about investment, but when I get into Sagicor investment, that's when I knew all about the stocks and the bonds, and so I selected one suitable for my long-term goal, which was owning my own business and acquiring a home. So I do a lot of roast on the side back then. So whenever I did any roast, all of that roast money goes straight into Sagicor investment. Because that's money sometimes that you don't really plan to get, but it actually came in, so you just put it where you're supposed to invest it. So when I see the money reach to a certain amount, there are other investments that attract bigger money, so I put it over. So I just keep flipping it over from one investment to another and then getting it growing. So I actually get the house out of it, get some extra tool out of it, and then start focusing on the business. So when motor sales close, then I just branch off and doing my own thing. Get a place to rent, get some tool, and I always have some other guys working with me. So I just pull them together and I start Bell's Auto Services. I always tell my friends that investment is the key, because once you have money, if you don't put down some, you find within a short time everything's spent out. My style of investing is an aggressive style of investment, because I take risk and take chances. And I realize when you take the chances and the risk, it pays off. You just calculate the risk and know that when you put something there, you leave it for a time and don't worry about it. Just put it there and leave it in Sagicor and to monetize for you. I'm very happy to be a Sagicor investor because it has done a lot for me. And it has molded me into the person I am now. A business owner, a homeowner, and going on.
that story. Congratulations to Kevin and again to the Sagicor Investments team for seeing his dream that was once a seed actually come to fruition. The man said, you have to bet on yourself, invest in yourself and take a chance on yourself. It's fantastic to hear stories like that. Now, Vitaly, I know that you have other engagements and you probably have to leave us, but we just want to thank you, to take the opportunity to thank you so very much for coming on, for making yourself available, for answering the questions, and for doing that in such a digestible manner that many of us who might be beginners or intermediate could understand. So we wish you all the best. We look forward to all of your insights and whatever you glean over the rest of the year. Thank you so very much.
Thank you very much to the entire Sagicor team. And right as soon as I finish this, I'm about to book my holiday to Jamaica. So we'll see you in the winter.
Absolutely welcome you. We cannot wait to have you and take you all around the island. Do take care.
Thank you.
And to you, our viewers, thank you so very much for staying with us. Remember to participate in this evening's discussion by using the hashtags #MoneyTalks, #Sagicor Investments, #Investor Briefing. Interesting views are being shared on investments and the global economy. And while we were looking at Kevin's story, there were some more questions that came in via social media. And again, we appreciate the audience participation. So I have a question here that says, as the recovery period continues, has Sagicor Investments priced in a market correction as market overextends?
I'll say that. That's a great question. I think we're not at the point yet where we're thinking about retracement levels. As Tara had shared earlier, our market is up just over 7% on a year-to-date basis, still trailing global equity markets by a significant margin. So we think that given the tailwinds that we currently have now of a positive kind of reopening stance, we're seeing a pickup in local business confidence. We do think that there's some opportunities for markets to continue to price this in. So we still think, feel a little constructive about our local markets. So not just quite time for retracement yet.
The next question I have from Zoom, and I hope I do not butcher your name, Alpheus McLean. How do I go about capitalizing on international stocks as an investment option? And that's a very good question because I have now said, I've mastered the whole local market, and being a shareholder. And now I have my eyes on the horizons of the international. And, I've spoken to a broker who said, it's not that we can't, but that sometimes the prices of the stocks are prohibitive. What we're accustomed to here, what we can afford here is not necessarily the same when we're looking at the international markets. But what do you, the experts, think where that is concerned? How do I go about capitalizing on international stocks as an investment option?
Saying earlier that you certainly can get into that market, right? There is the international brokers, so you can open a relationship with a broker here in Jamaica and trade in international equities, right? Yes, some maybe have run up in prices, and it's seems as if it's, am I too late? Is it too late to jump in? But what we've seen happening in the U.S. market, I don't think so. I think there's still some opportunity there, and I think we're going to continue to see growth happening. So, look at either doing it through, as I said, buying individual stocks or getting in through an ETF, the exchange-traded funds.
Tara, I'm going to have some conversations, off air so that you can tell me what are the good ones that I should, be looking at. I'm just letting you know right now off air, Thank you. But thank you for that. It's good to know because sometimes we hear information all around and we don't necessarily know what's right or, what the other opportunities are. So it's always good to hear different perspectives that offer a balanced, approach. I have a question here via Zoom, and it says, will local dealers have to register global bonds with the FSC?
Yes.
That is a requirement. Yeah. Is that what you said?
Yes.
Okay, so for the person who just asked, will local dealers have to register global bonds with the FSC?
Global bonds?
It says global bonds. Yeah, with the FSC.
No, global bonds, do not have to be registered. So if they're interested in buying, let's call it Apple, long bond that just came out, that's something that they can procure through their broker-dealer.
Okay. So I hope that person got it. And again, we want to thank everyone. We have persons watching via Zoom and on the other Sagicor social media networks, and certainly with the audience participation, it actually adds to the value of the conversation. Now, also here with us today is Jodianne Aris, Research and Strategy Analyst with Sagicor Investments. And today she will tell us about equity, a word we always use, and what to look out for in the market.
Hi, I'm Jodianne, and this evening I'll be sharing with you Sagicor Investments' latest equity picks. Starting with our local market, our expectation is that our EPS growth would be upwards of around 20%, and this is in line with what it is that we would have said the last time we spoke. And this is based on both a top-down approach as well as a bottom-up approach. And if we look at it from a top-down standpoint, we're thinking that if it is that projections are for GDP to grow in this year, then that should positively translate to the profits for listed companies. However, even though we're maintaining our baseline projection, we think that the upside in terms of the potential is stronger than when we last spoke in March. And this is based on continued rollout of successful vaccination programs, as well as faster than expected recovery in the markets. So pretty much last year we thought the market would have recovered, a little bit less than, 2 to 3%, and now we're thinking that it could recover even faster than that. And as such, we'd have put that into our upside potential outlook, and we're thinking that it is now definitely a bit much stronger. Now, digging a little bit deeper in the local market to look at our sector-specific outlook, we're seeing for tourism, our expectation is that based on the reopening and increased visitor arrivals, that sector could increase over the 80%. For our finance sector, we're looking at around over 10% in terms of growth. And we're really thinking that you will see quite a bit of upward price movement for finance in the second half of the year. And just to note that we are in June, so we're up on the second half of the year. Manufacturing sector, we're anticipating growth of upwards of 20%. And we know that we'd have seen food companies that have led quite a bit of the growth in last year, and as well as the construction companies. For the second half of the year, we're expecting to see other companies coming into the mix for manufacturing, and we can give a hint towards beverages. Now, having all of this information, what is it that we're recommending to our clients that they should have in their portfolio? Our top equity buys are Fontana, Seprod, and Mailpack. And these picks are really based on continued market expansion in these areas, as well as the possibility for build-out for these companies that could improve their performance. In addition, we want to just say to investors that Sagicor Select Funds is a good tool to use as a booster to your portfolio. As such, we are recommending both the Sagicor Select Manufacturing Fund, which is trading at around 90 cents, the price, when it compared to the actual value of the fund is about $1.10. So that's like a 20% possibility for upside. Now, remember I hinted earlier that finance, we expect second half improvements in the second half of the year, and we're at June. As such, now is a good time to start to wet your foot with Sagicor Select Financial Fund. When we look at where the current stock price is at around 60 cents relative to the value of the fund of 85 cents, then that is like a 25 cents difference and a 25 cents upside possibility. So I definitely say, wet your foot there. When we look at our whole recommendations, companies such as GK, Carib Cement, Lasco Manufacturing have been performing well. And they're now trading at around where it is that we'd have deemed as fair value estimates for these companies. As such, if it is that you already have exposure, we're saying to you, keep holding on to them a little bit longer, as there could be a little bit more gains to eke out from these companies. For Wasinco, we know that they're expanding within the export portion of their revenue segments. As such, we're seeing that as positive, as well as the possibility for growth in terms of opening in areas such as entertainment could really boost further for Wasinco. So if it is that you have our Wasinco in your portfolio, keep holding it. On the sell side, we're looking at 1834 Investments Limited. 1834 recently disposed of one of its highest interest earning assets, and as such, that kind of puts a little bit of a damper in terms of their growth prospects. For 1838 Student Living, their occupancy levels have declined, and as such, that has impacted their overall growth trajectory. So those two remain our sell options. Now, based on tonight's theme, which is global market perspectives, it's only fitting that we provide a little international hint. As such, U.S. top equity sectors that we're looking at are one, financial, and this is based on confidence in terms of bank revenues, as well as if you think about growing in terms of how it is that the economy should be doing, then it means that companies within the financial space are going to be holding back a little less in terms of expected credit losses. So we're not going to expect to have those big credit losses that we saw in 2020 and the early part of 2021, and that is positive for the financial sector. Also, we're looking at consumer discretionary. This gives you exposure to areas such as travel, leisure, recreation, and retail, and we know that with reopening of the economies, these areas are expected to be boosted. As usual, this is just a teaser. It's just a little hint, a little touch and go, and we're recommending that you reach out to your Sagicor Investments team. They are there for you, and they will help you navigate the waters as we move to further global market perspectives.
This week on the Trading Desk, we'll be focusing on why unit trust is a great option in today's market. So what is a unit trust? A unit trust is a collective investment fund that is priced, bought, and sold in units that represents a mixture of many securities within one portfolio. So there are three main benefits of investing into a unit trust. One, diversification in several assets, which reduces concentration risk in any portfolio. Two, unit trusts are normally managed by a portfolio manager, and you benefit from their experience and active management. And finally, three, lower management fees compared to other investment options in the market. Sagicor Investment currently dominates the unit trust market, with our Sagicor Sigma Global funds controlling 41% of funds under management. We offer the most diversified option of investments, giving you 18 portfolios covering equities, fixed income, and real estate investment, both locally and globally. Since the start of 2021, our funds have produced the best performing equity and fixed income portfolios. Our year-to-date return as at the end of April stood at 10% and 8% respectively. If you had bought in our US Sigma Global Equity portfolio last year, you would have experienced returns of 27%, and this is in US dollars. Now, based on the vaccine programs globally and the reopening of our local economy in key sectors, this set the stage for good performance in unit trust portfolios that are exposed to stocks. With this in mind, the unit trusts that we're recommending for this year are Sigma Equity, Sigma Global Equity USD, and Sigma Diversified. Join us next time on the Trading Desk.
Oh, thank you so very much for all of that information. I actually learned so much about the different product offerings. And I saw 18 portfolios, and I said, I actually need that in my life. Thank you very much, Sagicor Investments, for taking the time to always educate us, even throughout this panel discussion. Again, we want to say thank you so very much for that presentation by Jodian, who went through very clearly and very intentionally with her presentation. Now, I know I promised you some giveaways. Are you ready to find out if you are one of our lucky winners? All right, you're just going to have to wait 2 seconds more because I just have 2 more questions. For Sean, I believe. This question comes from Jason Allen via Zoom, and he says, does Sagicor Investments facilitate its clients in purchasing US ETFs, in brackets LEFs, and of course, for the purposes of persons who may not understand, Sean, could you just kindly remind us of what ETFs are and LEFs?
Sure. So LEFs will relate to our local offerings. So rather than, we don't have the ability right now to offer a collection of stocks in an X-traded fund format. So what we've designed, and a lot of innovation over to Tara and the team, was created a listed equity fund. So this is a way that you can get exposure to a collection or a basket of securities with different exposures. So Jodian touched on the Select MD fund as well as the Select Financial Fund, and those listed equity funds give you exposure to those specific sectors, so manufacturing and distribution as well as financials. In terms of US ETFs, no, that's something you definitely can call up one of the members of our wealth team. So please reach out to your investment rep, and you can find out how to get exposure to US ETFs, whether it's SPY or one of the iShare maybe ETFs that gives you exposure to a broad barometer of US stocks, such as the Russell 2000 for small caps or the S&P 500 for a more broad, diversified collection of securities.
Thank you. Stefan, I give you the very last question. We've seen, especially during the pandemic, where we've realized that there's so many solutions that we need, not just for our local citizens, but, regionally as well as internationally. And we've seen innovative solutions. We've seen new businesses. We've seen new kinds of sectors. We've seen more people speak about climate change. And we've seen more pushes towards renewable energy and electric vehicles. What has IDB been seeing in regards to these new pushes in these new areas?
Right. Well, the pandemic has really changed things a lot, and there are many sectors which have enhanced, and the growth has really just been tremendous because of the pandemic. If you look at one example I give you, if you look at Zoom, for instance, Zoom used to have 10 million calls a month before the pandemic, and a couple of months after they were up to 300 million. And so when the pandemic ends, they're not going back to 10 million. And there's so many sectors, online shopping, online banking. You guys, I'm sure, have seen so much more activity online. So there are a lot of areas where, because of the pandemic, technology and a lot of the online space have grown significantly. And so we're seeing more interest in these types of online virtual business plans. We're seeing a lot more of them. Some of them are a little bit early stage for us, quite frankly. And so they're talking to us on the equity side, but there are a number of opportunities that have come up because of the pandemic.
Fantastic. So again, going back to what Vitaly said earlier, there is opportunity even amongst all of this crisis and this loss. We do see opportunities, and we encourage you to try to come up with solutions for pain points that can help communities, regions, countries, even economies do much better. So you participated in our questions, and we have our winners. The very first question I asked was, name the Sagicor Investments online platform that facilitates the electronic submission of application forms for initial public offers, IPO, additional public offers, APO, or rights issues. If your answer was e-invest, that was the correct answer. And I believe we have winners here at Pretty Putus. I just love these names. At Pretty Putus and at Shari Perez too. The second question was, give the name of the first ever online investment educational platform in the region geared towards increasing investment knowledge and education among local and regional investors that is powered by Sagicor Investments. And if you are listening carefully and clearly to Tara, you would have heard when she spoke very proudly about it. The answer is Investor Core. So we have winners Tashana Smith and Stacy Suklal. That was from Zoom. We have a Facebook winner, Gary Link, and a new YouTube winner, Mr. Carl. So these are all of our winners, just letting you know. Our IG winners, Pretty Putus and Shari Perez too. Our Zoom winners, Tashana Smith and Stacy Suklal. Our Facebook winner, Gary Link, and our YouTube winner, Mr. Carl. Carl, I don't know if that is your first name or if that is your last name, but Mr. Carl it is. Congratulations to our winners, and thank you so very much for having participated. Now, the question is, have you been trading online? Well, let me tell you, Sagicor Investments has so many online options for investors. Now you trade stocks online, and you can be in charge of your portfolio from the comfort of your own home. Take a look.
Trading stocks online is easy and puts you in charge of your portfolio. Follow these simple steps to register for online trading so you can maximize your investment opportunities. Let's start by making sure you have an account. To open your stock brokerage account with Sagicor Investments, you can find the forms online at sagicor.com, which you can fill out and take to your nearest Sagicor Investments location along with your picture ID, TRN, last payslips, and a utility bill. Our wealth advisors are happy to assist with this. Already have an account? Well, let's show you how to register for online trading in 6 easy steps. Step 1. Visit the Jamaica Stock Exchange JTrader Pro website, jtraderpro.jamstockx.com. Step 2. Click on Sign Up Online. Step 3. Complete the first page with your personal information. For your ID number, please use your TRN even if your ID is a voter's ID or passport. Step 4. You will receive an email requesting for you to activate your account. Please click the link in the email and provide your username and password credentials to activate your account. Step 5. After you've activated your account and successfully logged in, please select Add JCSD Number. On the preceding page, please select Yes. When asked, do you have an existing JCSD account? Step 6. It will ask you for your account name. You can use a nickname to differentiate the accounts if you have more than one stock account. Please leave the amount requested for trading field blank for now. Step 7. Please click Submit and go ahead and send your advisor an email requesting for your account to be approved. That's it. Pretty easy, right? If you need help, speak with a wealth advisor at 888 Sagicor to get started on your journey to create, grow, or preserve your wealth. Remember, think wealth, think Sagicor Investments.
Create, grow, preserve your wealth. Now, before I thank my panelists and I give you your final words for all of our viewers, we left out someone. Our second Facebook winner was Dana Graham. So again, Dana Graham, thank you for participating. You are our second Facebook winner, and congratulations again. So ladies and gentlemen, it has indeed been an insightful night. And so before we wrap up and we actually tell everyone good night, the topic was global markets and investments. What are your final words?
Well, a big thank you to all our presenters today. Thanks, Vitaly, for joining us virtually. I think we did a great job. I got a lot out of it in terms of unpacking, from the very, high-level macro environment right down to what we can do with it. So I think it's always important to, take the perceivably abstract and make it something concrete and that's actionable. But I just wanted to thank everyone for being here today.
Oh, thank you.
And thank our presenters.
Thank you. Taro?
Yeah, sure. I'd also just like to add my thanks as well, and to all the viewers that joined us this evening, because obviously, if you tuned in tonight, you're interested in learning more about investments and the opportunities that are available in the global markets. So I just encourage everyone to reach out, talk with an investment advisor, call us at Sagicor Investments. That's what we're here for. We're here to help you create, grow, and preserve your wealth. So we'd love to hear from you.
Beautifully said. Stefan, you have the very last word.
Well, let me say thanks to Sean and the Sagicor team for the invitation. I thoroughly enjoyed it. And from the IDB perspective, we see ourselves as counter-cyclical. Last year, we had our largest year in terms of approvals. We approved $7 billion in loans last year, and we're very focused on the Caribbean and Jamaica, so we invite persons to approach us with your projects.
All right. Thank you so very much to Sean, Tara, Stefan, and of course, Vitaly, who had to leave us, but certainly he gave a very lovely presentation earlier, answered all the questions in a manner that everyone could understand. Thank you to our panelists and our presenters for sharing your knowledge with us. And my words, I guess, to you as a consumer is start somewhere. Pace yourself. Make your goal. And if there's anything you do not understand or areas that you're overwhelmed or you're intimidated, just simply make the call. There are persons who are trained experts who are here to answer all of your questions. Thank you for participating. Congratulations to all the winners. Thank you, everyone, for joining us this evening. Please be safe.
This is not an egg. This is a liquid, self-contained investment package that appreciates over time until a breakpoint results in delicious dividends. Think like a stockbroker. Learn how at investorcorejamaica.com.
There will always be opportunities to earn more on your investments. You just need to know where to cast your net. Last year, Sigma Global continued to rank among the top performing funds. With 18 different funds, you have more options to catch the best investment opportunities. Call 888 Sagicor to speak with a wealth advisor. Sigma Global Funds, only from Sagicor Investments.
Yeah. 2022. Bush loader. Ready, man? Yeah. Excuse me, no pagans. Now seek validation. Toast and admiration from you nor your patrons. Boasting about name brands. We cost over 8 grand. When me searching up the same one for the cost of a straight pants. Why own a Ferrari with nowhere to park it, boy? Why shop a Louis V when there is a target? Now me hype on my face it. True minds me a save it. Them go fend if it trendy. Bank account can't empty. Acres over markings. Link me wife when me want house. Cause when side girl I got feed up. Child support that lead to farming over plastic. Investment over profit. Inheritance for me Caesar. Me alright being mean. Yo, if you are 50 and never make a brings get used, means you're poor so your kids next to employment you use as a big excuse. You want him grow so him get through. See him 24 hours so what you have to. When your kids do good you buy them jewels. Wang and Rajiv buy their own tools to keep getting belted. Big when I sell on more piece. Nobody watch how me clocks lean. Soon start supply Walgreens. Stocks large when you plant trees. Them fields them would have put burger go for no mummer. You, sir. And it's a baker me bill from a buller. Sent me a dispensary, supplying them with butter. Acres over markets. Link me wife when me want some. Cause when side girl like need up. Child support that lead to farming over plastic. Investment over profit. Inheritance for me Caesar. Me alright being mean.
Where will we go? When the quarantine thing done and everybody touch road. Mommy, me gonna start, pull up in a fast car, yeah. And a fast start, make you want the fast part, yeah. I know you're feeling me. You know I'm feeling you. So what now we feel do, yeah. Hey, fancy. Oh yeah, date, now no vacancy. Last time, see up on FaceTime, chatting up the place, boating on my relationship. Me, I go put you on lockdown. I put your body on lockdown. You got me on lock now. You got my person on lock. Oh, if you love me. Where will we go? When the quarantine thing done and everybody touch road. Mommy, me gonna start, pull up in a fast car, yeah. And a fast start, make you want the fast part, yeah. I know you're feeling me. You know I'm feeling you. So what now we feel do, yeah. Hey, fancy. Oh yeah, yo, state, now no vacancy. Last time, see up on FaceTime, chatting up the place, boating on my relationship. Me, I go put you on lockdown. I put your body on lockdown. You got me on lock now. You got my person on lock. Oh, if you love me, you should let me. You should let me. You should let me know. And if you don't know, better feel let me. Better feel let me. I better you let me go. Pulling up, pulling up, pulling up. Nobody deal with the bag and talking. And nothing know we are chilling in an apartment. Hope you don't mind me asking, where will we go? When the quarantine thing done and everybody touch road.